What do you do when a phenomenal long-term story seems to fall apart right before your eyes? For the better part of a decade, the data center is one of the hottest secular growth stories around. We had a constantly growing need for more data center capacity as more and more companies migrated to the cloud. That led to some monster gains for the data center plays, including real estate investment trusts like Equinix that rent out space in their high-tech facilities, basically big warehouses for servers, to companies that need more computing power. Last year, though, we started hearing murmurs about a pause in data center investment, and the stocks got obliterated. But the long-term story was still very much intact the whole time. It's not like demand for data center capacity ever really went away. So once 2019 rolled around, the group started rebounding, with Equinix leading the way, up nearly 57% year-to-date. What's driving this resurgence? Let's dig deeper with Charles Meyers, the new president and CEO of Equinix. Get a better read on the situation. Mr. Meyers, welcome to Mad Money.
Thanks, Jim. Wish I could be in studio there with you today, but we appreciate you having me on the show.
Well, I'm glad you're on because I got to tell you, you are the man of the hour. We have been listening to a lot of semiconductor companies, but most importantly, analysts tell me that the data center story has slowed. Maybe it comes back next year. I look at Equinix's numbers and I say that's just not true.
We agree. I think we continue to see a really strong set of underlying secular demand drivers for the business, we're seeing real strength in the business globally right now.
Now, how much of that is because this is actually not a commodity business and you offer features the other guys don't, and how much of it is that Amazon, Google, Microsoft, and Oracle continue to get a lot of customers and need to expand?
I think it's a little bit of all those things. I would say that broadly, we've seen the sector, respond very well. We think there's a very deep demand pool for data centers broadly. But I do think that Equinix plays a very unique role in the market, and our differentiated position, I think, is allowing us to even outperform relative to our peers. And some of that, as you said, public cloud adoption is a major catalyst for our business. And every one of the providers you just mentioned is a significant customer and partner of ours. And as enterprises are adopting public cloud and looking at hybrid and multi-cloud as their architecture of choice, we're seeing really strong demand.
You know that we have been big supporters of Salesforce over the years. They're a tech company involved with you. And also everyone uses Netflix. So how do they connect with Equinix?
Yeah, I think that, we're one of those. We may not be a household name, but I think it's safe to say we're probably impacting the lives of many of your viewers on a day-to-day basis working with those types of customers. And we play a very important role in terms of interconnecting our customers, sometimes to public cloud providers, sometimes to software as a service providers like Salesforce, sometimes to other members of their supply chain, sometimes to networks. That's really a big part of our legacy and history has been interconnecting people, to networks. And so the interconnection story is a really central piece of the Equinix story.
Both Chuck Robbins, frequent guests on Mad Money, and Jensen Huang, so Cisco and NVIDIA, they have substantial edge computing businesses. Where do they lie within Equinix?
Yeah, I think that, right now we often talk about the fact that we believe that Equinix is, in fact, the best representation of the digital edge today. And that is the point at which people are interconnecting their private infrastructure with public cloud infrastructure, with networks, with other members of their supply chain. And so when you hear about edge, oftentimes that edge is, in fact, within an Equinix facility and being interconnected over sort of private interconnection facilities that are facilitated by Equinix.
Okay, so if I go into one of your facilities and you have myriad facilities, would I be able to tell, is it all the different clients, or is, like, let's say, does Google rent out an entire Equinix for their Google Cloud?
Well, typically inside of our facilities, we're a little bit unlike some wholesalers, which might have one or very small number of customers. We tend to have a larger number of customers in any individual facility, and they are distributed across the site, typically in private cages or sometimes in shared cage environments or shared rack environments, and they have their equipment there, all obviously very secured, something that's available just for them to access. But they're all across the facility, so you typically wouldn't be able to see who the customer is because they are very sensitive about that from a security standpoint, but they're all across the facility.
Okay, you've got big business in Asia Pacific. 21% of your business is in Asia Pacific. Obviously, you've got 32% in Europe. You've got a good view on trade. I sense there's more fear than there is actual slowdown in business, but maybe I'm wrong. What's your take?
Yeah, I think that's right. I think we're seeing right now continued strength across our business because people are prioritizing digital transformation as a way to gain competitive advantage. And the reality is people who are responding well to that are thriving, and people that are not are being left behind. And so, we're seeing strong demand. I think that the tensions, trade tensions, et cetera, probably affect some level of sentiment, but we have not seen that impact the demand profile for our business.
All right, last question. When I see you're a big cloud, Oracle, Microsoft, Google, and that's Microsoft is Azure, Google, but I also see that your customer is Walmart. Now, that is a company that we are just gigantic fans of. Is Walmart so big that they actually have their own? Capacity and don't necessarily just use Google's or Microsoft's?
Sure. In fact, I would say that's true of many of our large customers, that what the companies are doing essentially is using a hybrid and multi-cloud strategy. And so they have private infrastructure that they may house in a significant caged environment at Equinix, but they interface it then with the public clouds, and they're using a variety of public clouds to house some of their workloads. And so that hybrid multi-cloud environment is really the architecture of choice for enterprise customers of all sorts. And retail is actually an incredibly strong segment for us, but that architecture of choice, hybrid and multi-cloud, is a major driver for Equinix's business.
Well, I'm glad you said it because we think retail is much stronger than people are saying. I notice you're down to 1.78% yield, although you're a REIT. I mean, this is not as rate sensitive as when we used to talk to Equinix, right? I mean, it's just a growth story.
Yeah, well, with treasuries hovering at 1.55 or whatever it is, I think people who are looking for yield and simultaneously looking for growth and to play some of these secular trends, Equinix ends up being a pretty powerful story.
I couldn't agree with you more. Thank you so much. It's great to have you on. That's Charles Meyers, President and CEO of Equinix EQIX. We've been behind these data center stories for income and for growth. Thank you, sir.
Thanks, Jim.
Stick with Mad Money.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.